Okay, guys, about 2 more minutes. Tonight will be, for those who's joining, tonight will be a Q&A session. So I'm going to go over some things. Some things is going to be new, and some things going to be more helpful and useful for those who are trading and just trading on their own. And if you have any questions, just raise your hand or unmute your microphones and just speak up. This also will be recorded, so I'm gonna send this email to everyone so you guys can just go back and replay the video. All right, guys, let's get into it. Okay, if everyone can see my screen, just let me know if you can see the screen perfectly. You can just raise your hand. All right, all righty. All right, guys. So what I wanted to go over, guys, once again, welcome to a new year. Welcome to 2023. It's going to be filled with great challenges, and then also a lot of money also that's waiting for all of us. But what I wanted to go over, I didn't get a chance last year to go over, some things with the charts as far as getting more deep into technical reading of the charts. And as you can see, let's just do away with the watch list for right now. What you see right now, this is just a chart. Let's just focus on the chart itself. You just see candlesticks. You see red and green candlesticks. But this time you see the Bollinger Bands, which some of you are already used to. The Bollinger Bands, I got two set at the top. And then I got two Bollinger Bands, which are the blue lines on the bottom. And then I have this orange line, which is your moving average line that's going through the chart. This is actually an 8-day moving average line. And you know that within 8 days, the market is being this is following the market every 8 days, giving you an average of highs and lows of where the market is currently at. Also letting you know the support area, which if candlesticks are underneath this orange line, that means the market is hitting resistance. And if we go down and see that the candle's now above the orange line, we're now using this orange line, which is your 8 moving average. This is now support. So now if the market is above, you now wait till the market fall down, sit on top of it, and then you buy it back up. And that's pretty much how you trade it. So pretty much you're playing it more safer now. So meaning that the lines is your entry areas. Anywhere if you make any trades away from these lines, so if you make a trade like down here where there's like black empty space, you think the market is going to come down here, then pretty much you're just playing, you're guessing and you're gambling with your money. So you don't want to make those type of trades. This year pretty much is going to be a basic, as far as like these lines, they're basic lines. This is pretty much, it's what the professionals use all the time. Right now, this is a 1 hour chart. So I'm going to change it to like a 4 hour chart so everybody can, we can see things from a longer perspective, longer time frame. So now we're on the 4 hour chart. Same chart. We just went from 1 hour to a whole 4 hours. That means each candlesticks, as always, represent 4 hours. Let's just go up here. And now that we're on the 4 hour chart, let's now go over the blue lines. The reason for our blue lines is these are considered your trend lines. This follows the market trend. So whether the market is pretty much moving, let's just say, whether the market is moving, we got it up and down or sideways. I'm going to just give you guys an illustration of what I'm saying. Where are you? Always forget what this line got. I need you. There we go. All right, so whether we got, we go up, we fall down. This is a trend. As you can see, the market is trending. Then the market moves sideways. Then it goes down. Then it comes back up. Then it completely comes down. And then right now where it's currently at is pretty much trying to go up. All right. This is pretty much the trend. This is what the market is doing right now, which is our blue line. Let me give it at a different color since we got this black screen. I'll just give it a darker, I guess. Let me see. Should I give it like red? Yeah, I'll give it like this red line. So as you can see the red line, we have it going up, going down. That's the trend. As you can see, the Bollinger Bands is helping you identify that trend. As you can see, when we get down here, if I zoom up on the chart, if I zoom in, 1 second. Sorry about that, guys. I had to send it on text. So pretty much, let me just go back and fix this. So pretty much right here, let's just start right here in this little section. This is pretty much Wednesday, January, pretty much the 25th. So this is last month. So about 2 weeks ago, a week, 2 weeks ago. So this is a 4 hour chart. So as you can see, we had a candle here, this red candle. It came and it sat right here on the Bollinger Band line. And then other candles formed after that. And from there, from this Bollinger Band line, everything went up. Everything went up, went completely past your 8 moving average line, which is right here, this long, nice green candlestick. And it continued to go up on the next candle. And then the next candle continued to get higher. And guess what happened? From this lowest Bollinger Band to this highest Bollinger Band, you started to see the candle change when the next candle came. So it went from a bullish uptrend to a bearish downtrend. And as you can see, it went down and sat on another Bollinger Band line. And then it started forming a green candle. And then it just started going up in a nice trend. And then once again, the market got back up here to our blue Bollinger Band line. And then it started falling again. As you can see, it got back down, and it actually got back pretty much down to the lowest Bollinger Band. The reason for these Bollinger Bands, these are the areas where you should always enter and exit the market. So if we buy down here, let's just use this for instance. Use this as an example or illustration. If I buy here, I can buy near this blue line. The goal is to get out either at this blue line or this orange line, or if I think the market is going to continue to go up even further, I need to exit either here or I need to exit either here. Either way, the goal is to, as you can see, the market is low, so we can say buy low, sell high. Buy low, sell high at this line, or at this line, or at this line, or at this line. That's the goal. So if you buy down here, you need to be selling either here, you need to sell here, you need to sell here, or you need to sell here. And the reason for that is because this is now resistance. So if you buy at this blue line, that means the next line above it will be the next resistance. You don't know if the market going to always break past those lines, so you have to always be mindful of that. If you want to go long, then you can hold the position, but once again, it's up to you. It's all based on you. But if I get my measuring stick and get the ruler out, let's look at the as far as the distance between these spaces. So if I put the ruler here and I go up, this space right here has about 24 points, which is a gap. It's a gap of 24 points. All right, let's just say that. So that means you can collect 24 points, somewhere between 24 to 25 points within this span. And if you want to go up even higher, let's keep going and see how much more the market will move. Now look at this gap. Now we up here at the next blue line above. That blue line is at 73 points. So if you believe and you want to go for 73 points, then you can stay in the trade. But once again, we need to always prepare ourselves to exit a trade when it's at resistance if we're buying low. All right. And if we think that you think the market can potentially still continue to go up, then you go up to the next blue line and just right here, like a give or take, we're looking at about 100 points. All right. And you can see the number on the blue square. You will see it at the upper right corner. That's letting you know how much movement the market has done from the lowest Bollinger Band line, which is down here, to the highest Bollinger Band line, which is up here. All right, that's average. So that's what the market can potentially do. But when it comes to being successful and playing it safe, it's best to exit here. I know it's only 24 or 25 points, but it's best to be safe there. Even here at our yellow line, it's best to also exit there, also at the 8 moving average line. Or like I said, you just need to exit at these areas if you're not going long. But if you're just doing a simple day trade, then you need to buy at the line, sell at the next line above. And then same thing, vice versa. What if the market is falling? Same concept. You need to, right here, we just start with these candles here. These candles never got up here and tested this highest Bollinger Band line. It just came down here and it was here at this line in particular. So it came here. This is where you could have sold at. You could have sold, and then you could have exit the trade near your orange line. And if you believe that the market was going to continue to go down, which right now we're at 16 points, you could have got 16 points. If you believe it would have continued to go down to the next Bollinger Band line, then you could have got it for about 50 points, 50, 60 points, easy. This is now support. Remember when we were buying, everything going up was resistance. Now that we're selling, everything falling down is now support. These are support areas. The market has a potential to come here, sit here at this Bollinger Band line, and then go all the way back up. It can come here to this orange line and then go all the way back up. It can even come down to this lowest one on the bottom, guys, and eventually go all the way back up, which we currently see right here. We currently see it right here. It's already started its process of going back up. So this is how it works. So the best way to trade, if you have this one, this is the current candle. So if you have a candle that looks like this, as you can see, look at this long wick right here. It has a long wick and it's sitting on top of the 8 moving average line. This is an opportunity right now for a buy order. You can now buy that the market is now proving itself that it does not want to fall past your orange moving average line. You can now buy here, and then you can either exit here at this Bollinger Band line, or the one that's further up, you can exit here. Like I said, because it's now considered resistance. And whenever you enter resistance, you know the market is going to always, if it has some type of fight going on, it's going to fall back down. So you don't want to be in the money and then be out of the money because the market went up and you was already like 40, 30, 20 pips in the money, and then it just fell back down. And it's going to come, it might, well, once again, it might Let's just get rid of our red line here and put up another one. Once again, here's the this is the possible scenario that might happen. We're gonna start here, which we're already here on this orange line. We can go up. We can reject the blue line. We can fall back down. We can then try to make another attempt to get back up there to that blue line. Then we can fall back down. All right. And then we can try to make another attempt. Fall down just a little. And then we shoot past the blue line and get up to the next blue line, which is here. And then we can fall back down. All right. And then we just start this little steady little decline, as you can see right here. And then we'll come back down to old areas like right here. All right. And so what I'm going to do is put a horizontal line here so you guys get to see like a horizontal ray. That way we can extend the line out. So I'm going to just, try to do the best I can. I'm going to just attach it to our blue line here and then do the same thing for the line above. All right. So let's clone that. All right. We're going to do the same thing here. All right. This is what the market can do. So we'll just use these blue lines as the orange line is connected to the blue line as continuation of what the market could possibly do when it get there. And we're using this as these are the candles, but more like a line chart now. But we're using this is the possible outcome. The market could come up here, once again, hit your blue line, fall back down, try to make another attempt, fall back down, try to make another attempt, come down just a little, and then blow past the blue line and get up to the next highest blue line, which is the highest Bollinger Band it can possibly go to, and then just fall back down. This right here, guys, these are your areas where you need to be making your trades. You need to buy here, sell high. Buy low, sell high. These are your entry areas. You need to be buying and selling at these lines. If the market is in the uptrend, then you need to be buying near your Bollinger Band line or your 8-day moving average line. And then after that's being said, you need to start selling if the market is above and falling down. Same exact concept, which is over here. If the market is already up here, guys, then you need to sell here and buy low. Sell high, buy low. You just need to make sure you're near your moving average lines. Anywhere like in the middle, if you make a trade right now in the middle of a moving average line, you have no clue what's going to happen. You might think you need to buy, but the market might say, no, the seller is going to come into the market. So you're buying in the seller's market. So you don't know. You want to have more confirmation. So this is good. This is where my success came from. So last year I called about 500 points, or we could say pips last year, just following this. And this was at the end of last year. So that's 500 points from October to December. So that was good. So this is just straight chart reading. It doesn't matter what you trade, whether it's Wall Street or the Forex pairs. Everything's the same concept. The longer the time frames, guys, the better the trades, the bigger the moves will be. The better the wait also. If you wait, good things come to those who wait. If you wait for your opportunity, guys, then it's going to come regardless. But you just got to wait for that opportunity to come. Little tricks that you can use. You don't have to sit here and stare at a chart all day, guys. You can come up here to the top of the chart. And as you can see where your lines are, remember last time, I think sometime last year, guys, we went over here and created where the Bollinger Bands are and the moving average lines. We went over here and made sure that we can see the actual numbers of what those particular areas are. So right here where our 8 moving average line is, we got a number right here saying 0.7459 over here on the right hand side. Same thing for all of our Bollinger Band lines. So right here, this lowest one here, we got a blue number there. It's letting you know this is where the actual Bollinger Band is. And then we have the next Bollinger Band that's up right here. Slide over to the right, we got it here. So this is what we was going to use whenever we create tickets. We can then use these numbers so we can know what we should enter at. I wanted to make it simple for everybody so everybody didn't have to take their mouse over here and try to find, okay, what would be a good area to, where should I get in at if I'm on the Bollinger Band or if I'm on the moving average line. I got to put my mouse here and then try to go over to the right and see where it possibly can be. I wanted you to already have the numbers there already for you without you looking for it. So that's pretty much the best way of trading. Once again, guys, I also on this particular chart, I have major support lines also, which they are very important, but this is more from a longer time frame. That's if the market fall all the way down here to this major support line, then I'll buy back up. And the only way to find major support lines, you got to go to a longer time frame, and you have to look at areas where candles, a group of candles was all in a cluster and they all stayed in one area. That's how you find major support lines. This is pretty much a strong supply and demand area, meaning that buyers and sellers are confident with the price near this line. That's a supply and demand area, or you could say a supply and demand zone. It's great value here. So when it gets here, everybody's ready to buy back up. You know, it's pretty much getting like at a discounted price, pretty much. And then you slide over to the left. Remember, going over to the left tells a story. So all you're doing is looking for a group of clusters of candles. This is how you know what support level is. So you got a cluster of candles here, cluster of candles here. We have some here that never made it all the way up to the top, but they got close to it. So that's a sign. So that's pretty much how you find the support level. So even here, got a cluster of candles all grouped up together. And then we have some here that almost got up to the line and it rejected the line here. So that means this was a strong resistance at one time because the market is underneath the line. But then it eventually, as always, got breakouts going to take place. As you can see, we got a breakout right here. Market blew past the line, pulled back to the line, and then went back up, pulled back a little bit more, and then completely shot all the way up. Then fell all the way back down to the line again. Then it shot all the way up. So this, we could tell right here had to been some good news that day for the market to just blow past this whole entire area. So, but that's what it's all about. The best way to trade is to trade near your lines. We got the lines on there for a reason. So right now, if you don't have major support lines or major resistance lines on there, don't worry about it. What's more important is the Bollinger Band lines. We need to be focused on the blue lines. This is where you should always enter the market. This is where you always need to enter. If the market is at this blue line on the bottom, you should be focusing on buying. If the market is resisting the next line above, you should be focusing on selling. Guys, you're not going to always be right. I want everybody to be mindful of this. You're not going to always be right. But your win ratio will be greater than your losses. I know, personally. Whenever you don't have confidence, then you let this play out until it get to an area where you know, based on what you see and the data that it's giving you, you know it's going to reverse. That's when you get in and you don't have to buy a lot of contracts. Buy 4 contracts, 3 contracts, 5 contracts, 2 or even 1 contract. Never buy as many contracts knowing for sure you don't have enough confirmation to just, to go off of. That's going to give you, that's going to give you the confidence that the market is going to move in your favor. So never, ever buy. Okay, never, ever buy or sell if the market is not giving you enough information to go off of. Tonight also, I wanted to go over how to create tickets. Okay, what's the importance of a ticket? Okay, we go over here, we see the red button, we see the blue button. Okay, so we know the red button is a sell and we know the blue button is buy by now. So I can click on either button. It doesn't matter. I can do buy and then I can also change it once the order ticket is on, when it's on the chart. So right here, this is a ticket. This is your order. The number in the middle is the difference between the buy and the sell side, which is right here saying 0.0001. That's just a pip. That means both sides is 1 pip off. As you can see over here, we got 0.7466. And then over here on the buy side, we have 0.7467. That means the sell side is at 66 and the buy side is at 67. So it's just 1 pip difference. That means if someone's buying, then the other person on the other end is only 1 pip away from you. All right. So they only think they just need to make 1 pip above you. If you're the buyer and the person is selling, but the market is moving in that person's favor, and you have a stop loss and they have a stop loss, they just need 1 pip to be ahead of you in order for them to win your whole entire trade. And I'll explain that later. But for right now, let's focus on the ticket. Remember, guys, there are 3 orders that you make when you trading. We have market order, we have limit orders, and we have stop orders. All right. Pretty much a market order. Some of you pretty much know this already, but I got to go over it again just to make sure everybody's up to date. Market orders are buying it right now at the current price. So right now, the current price is, for the sell side, is at 66. That means right now, if I go to 66 right now, I can buy it right now at 66 at the market order. And then units is the contracts themselves. Since this is the CAD versus the USD, each contract is worth $1 and each contract costs $30. So if I have $30 in my account, say if I have $500 in my account, and I do the math, let's see, how many contracts can a person buy with $500, and we'll just go from there. So I'm gonna do the math right quick. All right, so 16 contracts. So if I have $500, I can buy 16 of these contracts. That means I will get paid $16. All right, every time the market moves 1 pip. I only want 50 points. So as you can see right here on this ticket, we're going to focus on the market order, okay? Market order don't have it don't have a price where you got to customize it. It's going to give it to you at the current price right here, that market order. I'm going to then click on, since I have $500, I want to buy as many contracts that I can buy with the amount of money I have in my account. So if I have $500, I can buy 16 units. All right, so that's 16 contracts. Then my take profit. I can go here and put the actual pips of how much I want directly. Type in 50, or I can go here and put the number that's on the chart, which is 0.7416. 0.7416 is here. So 0.7416 right there on the right hand side. Follow the mouse. So about right here. I can then customize that and type in 0.7416 right here in this box. So right there in the box, I can customize that. What I normally like to do, and I encourage everybody, is just type in the pips. Just type in the number of pips and how much you want to make for the trade, okay? Once you type in 50, welcome. Let me know if you can see my screen. You can mute the microphone. Just raise your hand if you can see the screen. If you can't, just let me know. So right here, guys, at 50 pips, this is how much I want, and then the number. This is how much I will get out when the market gets to there. I'm gonna go back to 50. I get out at 74.16. Right now the market is at 74.66, so that means 50 points from 74.66 to 16 is 50, and then it'll let me know how much money I will make off of 50 points, guys. $800. With $500, and you add the $800, you're already over $1,000. That's good money, right? You can make that in one day. In real time, guys, the market can move 50 points in one day. So that's not bad for a person who just want to make $800. As you know, as always, guys, it's not guaranteed that you're going to always see this. So we got to create some type of protection for our money. We're playing with $500. We have to always be realistic with ourselves. How much am I willing to sacrifice? Once again, you can customize the points. You can type in how much money of your $500 you're willing to lose. I'm going to say 25 points. 25 points will be at 74.91. This if the market goes up. When you're selling, you're investing in the market to go down, but the market goes up. How much in the negative are you willing to see before the market, before you exit the trade? Are you willing to lose $400, or are you willing to lose less than that? So let's say less than that, because I don't think I'm willing to lose $400 if I'm playing with 500. I could do half. So let's do half. All right. Let's just say 14 contracts. All right. I think that's fair enough. So if the market moves against me 14 points. So let's just say about 14 points. If the market moves against us, I sacrifice $224. I have enough to still trade again the next day. So that's how I pretty much look at it. It's not guaranteed you're gonna always win, guys, but it is best to trade near your blue lines or your orange line in order to see great success. So that's pretty much it. So I'm gonna slide this ticket over. As you can see, this is how ticket orders are created. This right now is a market order. So if I create this ticket right now, it's gonna get me in the trade right now at this price. I'm gonna get in the trade right now. It's letting me know right here. This is how much I'm risking, guys. It's the number in the middle. I say I risk $224. So I know my risk already in advance. That means if the market get here, guys, this is only the amount of money I will risk. This is the only amount of money will be taken out of my account. Nothing more than this will come out. All right. Letting me know also the units. I bought 16 units, and that's pretty much it. The percentage of risk, it doesn't matter. You don't have to worry about that. So what I can do right now, I can create the ticket. I'm just doing it right now, guys. Educational purpose. Let's create the ticket right now. We create the ticket right now. As you can see, it shows that it's been active already. And I'm $32 already in the negative. At the top, guys, it's the stop loss because this is a seller. I'm focusing on selling. So I will make money if it falls down here. All right, and it's vice versa. You flip the other way, you will make money if it goes up if you're buying. Guys, up here is where the orange line is. This is the stop loss. Once the market get up there, guys, then that's it. I completely exit the trade. Okay, I'm $16 right now in the negative. It's a possibility this thing might fall while we on this webinar, but this just letting you know. Now I'm $0 in the money, guys. Now I'm pretty much back at break even. If I want to get out of this trade right now and just collect my whole entire position, all I got to do is click this X button right here next to the order. This is the new ticket order. I just got to click X. It'll close the position. As you can see, the words right there on the right hand side say close position. All right. Or guys, if I feel that, you know what, I think the market is going to do a reverse on me, I can go over here and reverse the position. And so now that it's a seller's market and I have a sell ticket, I can now reverse the position and turn it into a buy position. And they say right here, are you sure you want to reverse pretty much your contract and the name of the contract? They say, yeah, I want to reverse it. I can reverse the position. Now I am a buyer. Remember, I had two orders. I had a stop loss and I had a take profit area. They completely are now canceled out, and I only have just a buy position. So if I want to create a take profit area or a stop loss, I have to go over here and customize it, all right? But as you can see, I'm now a buyer. I got rid of the old ticket. I did all that just right here by itself. This is only, you don't need to use it all the time, but if you ever need to, it's there waiting for you and it's available for you. I can then go over here to the left, guys, and create take profit area or a stop loss. We need to create a take profit area. We want 50 pips. So let's create it and then click on 50. All right, let's wait till it come up. There we go. Let's do 50 points. And once again, over here, we want it for the stop loss. Everybody remember, 14. And there we go. So now it's the same thing, just reversed. The first ticket we started out with was a sell order. Now we got a buy order. And that's pretty much when you buy at a market price. All right. That's now, get rid of this ticket, just educational purpose. We're just going to get rid of it. Now we're going to do another order again. Now we're going to go to a limit order. What's the difference between the limit order? Okay, remember limit orders, if we're a seller, let's just focus on selling. A limit order is selling at an area where the market is not there yet, meaning that the market is now in the uptrend. That means I want to sell at a future price, not a past price. That's the difference between a limit order. Limit orders are selling at future prices. So this is the current candle. If I sell up here next to this Bollinger Band line, which is at 7486, that will be a limit area. So that will be a future price. So that means I have to have a limit order. Now, if I sell down here underneath the candle itself, let's just get rid of these so everybody can see the candle. So if I sell about right here next to this, let me just show you guys, show you. So right here, as you can see, if I sell like right here, all right, see my blue arrow, the blue line showing, it's pointing at the orange line. If I sell underneath the current price right now is at 74.66. Anything under 74.66 will be a stop order because I'm selling now for the market to fall down underneath its current price. That will be a stop order. Limit order will be selling above current price. All right. Sell above current price are limit orders. Sell below current price are stop orders. That's the difference. So if you might want to write it down, sell below the current price is a stop order. Sell above current price is a limit order. That's the difference. All right. That's how it works. Same thing on the buy. If a buy position, same concept. If you're buying, now if we buy, let's say we buy right here. If I buy and I'm buying above current price, then it's a stop order. I'm buying above current price. I mean, the market is coming up to me. I don't have to worry about it being a limit order. Now, if the market falls underneath the current price, then guess what? I now have to buy at I'm underneath the current price. So right there on the right hand side, 74.67. I now have to buy below it. Then I am buying a limit order. All right. Because I'm buying. In order to buy, the market got to go up. That's why it's a limit order if I'm buying underneath me, meaning that I'm going to buy when the market gets to this line and sit on it as support and then go back up. That's called a limit order. All right. This is how tickets are created. So you want to always be mindful when you create tickets and you create an order to get into a trade. You want to be mindful of that. So in real time, let's really create a real ticket based on what we currently see right now. Let's do that. All right. Let's get rid of the ticket and then let's go back on here and start from scratch. We're going to still use these two orange lines as continuations of our blue lines. Okay. And how about I just do that with everything else? Okay, let's just do that with everything else. All right, let's just try to just put orange lines next to everything so I could just say that it's a continuation. No, I don't need to. Let's do away with it. I'm looking at it now. I think I can get away with it. Okay, so what we're gonna do in real time, let's create a real order. All right. Right now we got the market going up. We know it's coming up here, right? This is going to be the next area of resistance. So what I'm going to do in real time, let's create a sell limit order because we want to sell when the market gets to this line. Only reason why, because remember, this is resistance. And as we go over to the left, we see that the market had a hard time going past this line and staying above that line. So this is what we want to create a ticket order to this line right here. We want to create it because look at this little section over here, guys. Look at all these candles. Every time these candles got to this line, look, all you seen was a little bit of wicks come out, but then everything eventually go back down past that line. So this line has already proven itself as strong resistance. So what we're going to do is create a limit sell order. We're going to create this order now and then not even worry about it no more. We're going to have confidence that the market is going to repeat what it done before, all right? Not guaranteed, but hey, we got to make wiser and smarter trades. So in order to make wiser and smarter trades, we have to go with the flow of traffic and not against the flow of traffic. So right here at this line, our Bollinger Band line is this blue line here. We need to go over to the right and find what number that is. We got 0.7485. 0.7485. This is now a limit sell order. We need to enter at 0.785. I go over here and create a sell ticket. I want the market to fall back down so when they get to that line. So I have to create a sell ticket. So we're going to do a sell limit order at, remember the number, 7485. So 7485. All right, it's letting me know right here on the tick side, if we go over to the right, it's letting me know that the market is 20 points away from this number. All right, that's what the bid is. Or now it's 21 pips, 21 points away from that number. I'm sticking to the 16 contracts. All right. I can even do 5 contracts, because once again, this is real money and we don't want to play with real money. So I do 5 contracts. That means I'll get paid $5 per point. I want to keep the 50 pip moving average. Well, let's be realistic. If it falls down, guys, let's focus on the gap. From here to our orange line is how many points? So this is 85 here. Now just focus on the last 2 digits. We got 85 and 59. So with that being said, we have about 25, 24 points. All right. So let's be realistic. Let's exit the market at 24 points. All right. $5, 24 points. This would be 61. Let's do 59. I'm sorry. I guess 26. Yeah, 26 points. Let's do 26 points. And let me know right here, 74.59. I'll get up the trade. So about 26 points from me entering here at 74.85 to 74.59 is 26 points. That's what it is. All right. I will make off of $5, guys. I will make $130. Okay, not bad. Stop loss once again. Since it's a seller, I just need my stop loss to be up here in this black line, this black area. Or it be up there next to the next Bollinger Band. It's all based on pretty much me, how much money I'm willing to lose. So let's see. If the market come against me 14 points, that'd be $70 I sacrifice. Not bad. I'll do 100. So let's just go till we get to 100. 20 points. I'll sacrifice. If the market move against me 20 points, that's at 75.05. So we're at 75.05 over here. So pretty much 75.05 will be pretty much right there next to that next Bollinger Band at the top. So that's not bad. If the market get up there, it's a possibility it can still fall back down. But as always, guys, trading is something where we have to take serious. We still have to exit the trade. You can stay in the trade if you choose to, if you just have that type of risk appetite. I don't have a risk appetite. I'm getting older. I want everything to be safe. I want to be more wise with my money. God give us this money for a reason. And we want to trade like it's a real business. And you want to value and cherish your money. So we're going to exit if the market get here. So I'm going to stick to my 20 pips. I'll sacrifice $100 if the market come against me. I'll get out at 75.05, which will be pretty much close to our blue line anyway. And I'll sacrifice just $100. This is a real ticket that we're going to create right now. Let's just create it. Once again, I got the sell side and the buy side is only 1 point away from each other. So 1 pip. I create this ticket right now. This will be a more realistic trade that all of us should be making. The reason for this trade is that we are in look like a bullish market. It look like the market is trying to start to get up there now, start going up. So we know that we need to make trades near the blue lines or our orange line. Orange line is our moving average. Blue lines are the Bollinger Bands. Blue lines represent the trend that the market is in. As you can see, the market is going up, going down, and staying locked within that trend. And then your 8 moving average line is just following the market every 8 days, giving you the difference as far as what support levels and resistance levels are within those 8 days. So that's the reason for the lines. But also as far as where should I trade? These are questions I always ask myself when I first started trading. Where should I enter the market? Let's not worry about how much money we can make. Let's focus on how to be successful entering and exiting trades. We need to enter here because the market is going up and it's going to fall back down anyway. But guess what? If it falls back down, most likely it's going to fall to what area? Okay? What area will it fall to? It's going to fall right back down here to our 8-day moving average line. It might come back down here and then go right back up. See, so let's give a scenario. Once again, I'll get out the line, and I can show you. It can get here. We're going to buy here anyway. It gets here, and it falls down. But it don't go all the way down immediately. It goes back up a little, and then it still comes back down. But then it goes back up a little bit more, but then it comes back down. And then one more attempt. It tries to go up. Then it falls all the way back down right to where we want to exit the market. Right there. And this is our exit right here where the arrow is pointing at. That's our exit right there. We get out the trade, 24 points. So from here to here, which is that little dotted green little, line that you guys see on the chart, it's 26 points right there. And we get out the trade just like that. That's how you should be trading. We need to sell high, buy low. Sell high, buy low. These are just some scenarios. This is what can happen all the time. Same thing if it's going up. Same concept, guys. You buy high, buy low, sell high. That's how you should enter the market. Never, ever, ever touch this, getting to trading and not knowing where you should enter. The lines are on your chart for a reason. If you don't have those lines, all you have to do is email me. If you don't have the lines, just email me, guys. I know we got 10 more minutes on this call, so we should be done soon. All right. If you don't have these lines on your chart, just email me. Let me know. Just let me know if you need them or not, and I can show you exactly where to go to find them. That's pretty much it. Always buy and sell near your lines. Never trade away from the lines. Buy and sell near the lines. They own your chart for a reason. Here's the daily chart. This is where my great success come from, guys. I focus on those daily charts. Look at this. The daily chart showed me the whole entire 24 hours of what took place. This is the new candle, but look what happened pretty much today before the market closed. After 5 o'clock, we're on the new day now. Remember, after 5 o'clock, when 6 o'clock comes, we're on the new day. From 6 to 5 tomorrow, then that will be a whole full day. From 6 to now to 5 tomorrow is a full whole day of trading. So the market ended on this particular candle. It ended at 5 o'clock today. Look how much moves. Let's get our ruler out and just measure this green candle. I'm going to measure from the top to the bottom of the wick. As always, let's see how much points the market did on this particular market. We're going to start at the top wick, and we're going to go to the bottom wick. 48 points. On the longer time frames, guys, right here, I would have sold because, as you can see, this is where my success come from. I would have sold right there at this market, at this moving average line. The market is underneath it. It went up and made an attempt and fell right back down. As you can see, it closed below. And then when it opened up today, it tried to go back up. And guess what it's doing right now? It's falling right back down because it's hard to break past this resistance right now. Our 8 moving average line on the daily chart is acting as a strong resistance. I have 1, 2, 3 candlesticks already confirming that it's strong resistance. So I could easily now, as you can see, get in on this trade and let it fall back down. Remember, if it's falling back down, what area will be its next area of support where you can buy it back up? You got this one support level, and then you got the second support level right here. So you got 2 support areas. Most likely it's going to come back down to our Bollinger Band line on the daily, guys, and shoot all the way back up. So right now, in real time, we can create another ticket. We can create a ticket here for a buy position. So let's get rid of the sell order and let's create a buy order. So now that the market is above an area where we want to buy it back up, we have to create a buy ticket. So what type of order should that be? Should that be the limit or should it be a stop buy order? How should we go about it? We know that the market right now is currently, it's falling and it's going to get there. Remember, a buy stop order is buying above current price, and then a buy limit order is buying below the current price. So we're going to stick to the buy limit order. We can buy right here our Bollinger Band line. As you can see, I got the Bollinger Band line over to the right. It's already highlighted for us. 0.7448. 0.7448. So let's create that ticket. 0.7448. All right. It's letting me know it's 15 points right now. It's 15 points away. Now it's 14 points. So right there we're playing at 14 and 15. Once again, I'm buying 100 contracts. Forget it. I don't care. I'm ready to quit my job tomorrow. I got to do this, guys. Don't judge me. So we're going to buy 100 contracts. It's only just $3,000. That's all you got to have just to buy 100 contracts. So let's go on and just do it, guys. So with that being said, we bought the 100 contracts, but realistically, where shall our take profit be? That's the trick question. Should I exit here? Should I exit here? Should I exit right there in the middle where I don't really know where's the support level or resistance level? Nah, I should focus right there, actually selling right there when the market get back up there to that smooth moving average line. That's where I think what should be the safest place for me to exit the trade, because I don't want it to be in the money while I buy here and I'm right, and next thing you know it goes up here and then it comes back down to where I originally got in at, and then now I'm in the negative because it falls all the way down here now. So we're going to exit at 7471. That's our take profit area. 7471. Right here is at 7471. So we're going to do a take profit at 7471. All right. That's only 23 points, guys. Not a lot. But hey, it's a lot when you buy 100 contracts. That's $2,300, guys. Somebody will make off of just 23 points. That's not bad. If you got the money for it, guys, I encourage everybody. If you got $3,000, please do it. Please do it and send me a screenshot. I have to see this. But we'll get back to reality. That's 23 points, guys. It doesn't matter how many contracts you buy. It doesn't matter what type of account you have or what size of account you have, guys. It's all about the proper way of executing the trade. That's what it's all about. This is more realistic. This is a realistic trade. People make these trades every day. We now know where we should get out the trade. Yeah, it's a potential, guys. It can keep going up, but do you really want to chance it? You know it got to hit some type of resistance. And if it's no real big news event coming out, guys, I wouldn't chance it. So let's just aim only for those 23 points. If you know a news event come out and you believe that it's going to go up and it's going to blow past here and it's going to give you think it might move 50 points, then by any means necessary, go on to put up the 50 points. But for right now, we're going to focus on reality, okay? Reality is that it's going to move only 23 points, okay? And our stop loss, since we are playing with 100 contracts, I don't think none of us want to see a negative of $100. I think that's as far as the max I can take when I'm losing $100. So I'm only doing 1 point, as a stop loss. That's just me personally. I just can't afford losing $200, $300, $400 real fast. Guys, that means every point a person right now is getting paid $100 per point. So if the market comes against you 1 point, you lose $100 immediately. But this is me actually being funny at the same time, but also being realistic. This is what people are doing on average every day, guys, the professionals. We average people, we only buying like 10 contracts. But I want to be realistic with you guys, because we're going to get there one day and be making this type of money. So let's be realistic with ourselves and get into how this stuff really works. It's all based on how many contracts you buy. Each contract is worth $1. If you buy 100, you get paid 100. If you buy 50, you get paid 50. If you buy 1, you get paid 1. That's how it works. Also, your pips is based on how many contracts you buy. Each point is worth $100 if you buy 100 units. That's how it works. If we put 5 points in there, meaning if the market comes against you 5 points, you sacrifice $500. It's the same concept with everything else. It doesn't matter how many contracts you buy. It's all the same. So I'm just going to be realistic with everybody. I'm just going to do 1 point for right now. And that means one market move against us 1 point, we out the trade. Guys, this is the max you can lose. That's it. You have to customize your own stop loss. No one did it for you. All right. This video is definitely about to end soon. But I just wanted to let everybody know this is pretty much how tickets will be created. And this is how a person will create a ticket. We now have this ticket created. It's ready to go. All I got to do now is click this blue button on the bottom. And there you go. We now set this ticket. The order is already set. We can now go about our day. This ticket is good for a whole 24 hours. Once the 24 hours is up and the market never comes or activate this ticket, you have to create another ticket for the next new day. Always remember that on all trades. Not all the time the market is going to get to you and activate the trade, because the market probably some days just don't do too much movement. But in reality, this is how you should trade all your trades. So as you can see, we have everything set up. Everything is now set up. It's good to go. I have 24 hours for this trade to become active. If it don't become active in 24 hours, then I have to redo this trade all over again. Okay? And that's it. Anybody got any questions?
No, thank you.
No problem.
Great job, bro.
I appreciate you.
Good job, Will, man. Appreciate you, man.
Yes, sir. Yes, sir. All right, guys, that definitely will wrap it up. Let me see if there's one more thing I can show you guys. You guys already know about your watch list. This is my watch list. I actually trade everything you see on here. So it's a watch list. I'm going to do another video with you guys because we only have 1 hour. It's so much to go over. We're going to go over the next time, Lord willing, if we get an opportunity. We're going to go over correlations, okay?